In a world obsessed with fast profits and viral stock tips, one book stands as a monument of discipline, reason, and long-term thinking. Security Analysis by Benjamin Graham and David Dodd. It's not just a book, it's a mindset, a blueprint, a call to every investor to think deeper, act wiser, and invest with purpose. Published in 1934, during the depths of the Great Depression, Security Analysis was born out of economic disaster. Markets had crashed. Fortunes were lost. Trust in Wall Street was shattered. And yet, from the rubble, Graham and Dodd offered a light, an investment philosophy built on logic, not luck. Their message was simple yet revolutionary. Don't speculate, analyze. Don't follow the crowd, follow the numbers. The heart of Graham and Dodd's philosophy is the concept of intrinsic value, the real worth of a company based on its fundamentals. They taught that stocks are not lottery tickets. They are ownership in real businesses, and every business has a value, regardless of its market price. Imagine buying a house. You wouldn't pay whatever the seller asked. You'd look at the location, condition, neighborhood, and compare it to other houses. You'd analyze. Why don't we do the same for stocks? The second core idea is the margin of safety, the cornerstone of intelligent investing. Let's say a company's real value is $100 per share, but you buy it at $70. That $30 cushion? That's your safety net. If the market drops, you're protected. If it rises, you profit. It means never paying full price for an investment. Always leave a cushion, a buffer between price and value. Because in investing, as in life, things don't always go as planned. Graham made a sharp distinction between investing and speculating. An investment, he said, is one which, upon thorough analysis, promises safety of principal and an adequate return. Anything else is speculation. Buying Bitcoin at its all-time high without understanding its value? That's speculation. Buying a company you've researched, studied its earnings, leadership, industry trends, and found it undervalued, that's investing. The book emphasizes deep analysis, reading balance sheets, understanding income statements, knowing what drives profitability. It teaches you to look beyond headlines and hype, to dig, to question, to think independently. In the early 2000s, Amazon wasn't making a profit. Many wrote it off, but those who dug deeper saw growth, reinvestment, and customer obsession. That analysis paid off. Graham famously wrote, "In the short run, the market is a voting machine, but in the long run, it is a weighing machine." Short-term prices are influenced by emotion, trends, and news, but in the long term, only one thing matters: value. Think of that friend who gets attention for flashy clothes or wild opinions, but over time, it's their character that defines them. Stocks are the same. Flash fades, fundamentals stay. So how do you apply this in your life today? Start by thinking like an owner, not a trader. Study companies like you're buying the whole business. Ignore short-term noise and follow long-term value. Always demand a margin of safety. Whether you're investing $100 or $100,000, these principles protect you from the chaos of the market. Warren Buffett calls Security Analysis the most important investment book ever written. He read it at 19, and it shaped everything he did. He built Berkshire Hathaway using its core teachings and became one of the richest men on earth. The principles laid out in that book saved me from many stupid decisions. Warren Buffett. In today's world of meme stocks, crypto swings, and get-rich-quick schemes, the wisdom of security analysis is more important than ever. It teaches us patience, discipline, thinking independently. It reminds us that real wealth isn't made overnight. It's built over time, with wisdom and care. So the next time you're tempted by a hot stock tip or flashy news headline, pause, breathe, and remember what Graham and Dodd taught us. Do your homework. Know what something is worth. Never gamble with your future. And always leave a margin of safety. Because wealth is not just built in the markets, it's built in the mind. If you found value in this, share it with someone who needs to hear it. Like the video, subscribe to the channel, and drop a comment. What's the best investing advice you've ever received? And remember, fortune favors the wise.